So with that, I'm going to ask my colleague Larry to go ahead and start the recording.
Unmuted.
Ready?
Done.
And we're going to get started. All right, so yeah, I want to welcome everyone again to the National Fairtax webinar. This is your host, Mark Maneri, joined by my colleague, Larry Walters. And man, we've got an exciting presentation for you tonight. We're really focused on what we need to do to make a real impact and have the Fairtax see the floor, so to speak, and have it be heard. And we'll be sharing that with you tonight. I want to start out by launching a poll. So I want to invite everybody to really bring your eyeballs to the screen. And we want to get a sense of where you are. Yeah, so you should see something up on your screen. Larry, correct me if I'm wrong. And and we'd like you to vote. So are you brand new here, or do you understand the main points, or are you familiar enough where you would consider yourself an expert? So we'll take about another 10 seconds here. We've got half the people voting. Let's get it up to 100%, and that'll give us a great idea of how we can really share the Fairtax and where to spend some of our time this evening. So just take a few more moments. Your eyeballs should be on the screen. You should be voting and submitting. And we're going to go ahead and close out the poll in 5, 4, 3, 2, and 1. All right. Thank you, everyone, for participating. Great. So, yeah, we've got, well, you can see it right here. We've got 23% are really new. We've got many that understand its main points, and a handful of people that would consider themselves experts. I love that. It's great. Okay, great. So as we move into this, you know, one of the things that Larry and I love to share about the Fairtax is that in a very complex country that we live in, with lots of diversity and lots of various opinions, you know, sometimes what offers the greatest solution is simplicity. And the Fairtax, one of its main tenets is that it's simple. And as you can see here, we've got a tax code that this is a bit outdated. It's over 75,000 pages. And, you know, there's not a single human being on earth that can understand it, know it, see where its holes are, and you know, with all the patchwork that's been done to it, you know, what you've got here is something that's broken. And I think people know that. In fact, you've got a president-elect who has really declared that in the first 6 months of his presidency is going to really look at this tax code and do something about it.
Mark?
And major tax reform is coming. Go ahead, Larry.
You still have the poll on display.
Thank you.
There you go.
Is the image up of the Fairtax code, or of the tax code?
Yes.
Yeah, great. Thank you, Larry. Yeah, so we're in prime time here, ladies and gentlemen, and that's, you know, one of the things that we really want to communicate tonight is we have a window here, people. We've got a window of, you know, if Trump holds true to his declaration of making some major tax reform, and if we can learn anything from history, then if tax reform occurs in a major way, then it's likely that that won't be touched for, you know, quite frankly, a very long period of time. So we are poised to make a real difference, and we're going to need your help to do it. And the first step in this is to really align yourself, understand, and then align yourself with this legislation. So the Fairtax is, you know, just really simple. It's 131 pages, double-spaced, and our current tax code, it's convoluted. You know, I love saying this. It punishes growth and inspires the wrong behavior. I mean, just think about that. The more money an individual or a business makes, the more the government takes from it. And at some threshold, there is a threshold for all citizens and businesses. It's going to be different for everybody, but there is some threshold where they will start to think the opportunity, the cost, or I should say the pain of the government taking more of my blood, sweat, and tears and the efforts that come from it is going to be greater than the pleasure that comes from making more money. And they'll stop, and it's what happens. So what I love about the Fairtax is the way that it's organized is it sets us up to take the lid off. In our current tax code, there's a real lack of transparency, and as a result, there's loopholes. We'll talk about that. It's inefficient, impedes privacy, and there's winners and losers. You know, if you think about it, think about President-elect Trump. Now, here's a man who has spent likely a fortune on experts on his team that can have him legally avoid paying taxes. That was a major part of the debates. So, you know, we've got winners and losers, and it's very time intensive, and it'd be really great, especially I can speak to this as a business owner, that if I could reinvest all of my time thinking about tax implications into making my business better, well, that'd be better for everybody, including the economy. So that's what you've got in our tax code, and likely there isn't anybody on the line that isn't here because they think what we've got is perfect and great. Yeah, I imagine you think it's really broken like we do, and you're up for a change. So you've got the Fairtax legislation, which is legislation that exists right now. This isn't a pipe dream. No, this is introduced. It has been reintroduced multiple times to Congress, and we feel like we're poised to actually have it be heard. And we'll discuss why that is a little bit later on in the presentation. So, yeah, I've already said it. Our tax code is convoluted. The Fairtax, 131 pages double-spaced. When it's simple, it's better, and that alone is making a huge difference. So let's talk about this idea of supporting growth. The Fairtax, in its most simplest form, it's a consumption tax, and this we're going to show you in a little bit more detail later on, so I won't spend a lot of time on it right now. It's a consumption tax, not an income tax, and that is the biggest difference. You know, people say, "Oh, we're going to do major fair tax reform, and we're going to monkey around with income tax percentages." Yeah, and that's monkeying around. See, if we want to do something really different, something really special, something that's going to make a real difference, something that's going to last, something that's going to lead the world, we will actually make a paradigm shift in the way our federal government collects its revenue in an intelligent, progressive, powerful way. And in fact, there's a risk that we're not the first to do it. And we'll talk about that. So the Fairtax would eliminate all the federal taxes and repeal the 16th Amendment. In other words, income taxes go away, personal income taxes, corporate income taxes, capital gains taxes, the payroll tax, which includes FICA and Medicare, estate tax, death tax, alternative minimum tax. These are all gone. And we fund the federal government through one major revenue driver where we tax consumption or spending via a sales tax. So it's fully transparent and there's no loopholes. And I want to make sure I didn't, yeah, great, we'll get to this in a second. So yeah, so here's a nuance. If you're new, then it's really important you know when we tax consumption and spending, it's only on new goods and services at the retail level. So business-to-business transactions are not levied. And the rate is 23%. And I should say right now that $30 million of independent third-party research from some of the country's most brilliant PhD economists over a very long period of time went into creating this. So when we look at a number and you go, well, how did they come up with that? You know, it wasn't throwing spaghetti against the wall. It was several dozen PhDs who came together and unanimously created a model, a revenue model that would be revenue neutral. In other words, 23% collected on the aggregate spending by all that everyone who comes to this country and who operates in this country will generate the same amount of revenue by the federal government that they currently collect right now. So with that said, let's go a little bit deeper. Why would we do this? So think about this for a second. You've got as much as $120 trillion in global personal and corporate assets parked in offshore banking centers. And that 120 trillion, you know, the emphasis is on global. It's not just U.S. citizens and businesses, but every businesses from and individuals from around the world. And that wealth is going to be attracted into the United States for a very specific reason. For starters, the U.S. becomes a corporate headquarter haven. Well, why? What does that mean? That means international businesses that conduct commerce internationally will look to relocate their physical infrastructure and headquarters in the United States because we'll have the lowest effective corporate income tax rate in the world. 0. Is this a major factor? Absolutely, 100%. Yes. Look at what's happening out in the world right now. Look what's happening with U.S. businesses. It's a major shift called inversion, where U.S.-based companies are relocating corporate headquarters in tax-friendly countries like Ireland because there's a phenomenal savings when they do that. And if you're paying attention, you've seen this in the news over the last year. Well, think about when the lowest corporate income tax structure in the world occurs, and it happens right here in the U.S. Yeah, companies are going to relocate over here. They're going to build, they're going to put people to work to do that. They're going to create a phenomenal amount of jobs when they do it. It's a huge point. Underground economy, estimated at $2 trillion. They will pay their fair share. See, when the Fairtax gets implemented, everybody, we broaden the base, and everybody pays their fair share. Yeah, it doesn't matter if you're an illegal alien, if you're a tax avoider right now, the moment the fair tax gets passed, you cannot avoid it. Right? You go to the grocery store and you buy a dozen eggs and a loaf of bread, you pay your fair share. You buy a $100,000 sports car or a $5 million home, you pay your fair share. And that's why the fair tax is progressive, and we really like that. You spend more, you pay more. The wealthy and the people who have more disposable income, they're going to spend more. They pay more. Yeah, really, really brilliant concept here. So right now, the IRS is collecting only about 75% approximately of what it should. And it's very inefficient to run, and the people are dodging it. So the fair tax is really brilliant. So first of all, we've already got an infrastructure because 45 states currently collect the sales tax. What will happen is that the fair tax will create state sales tax bureaus. And those bureaus will be responsible for collecting the businesses in its states or district. And we get 80% more efficient. We go from 120 million households to 20 million businesses, 80% more efficient. That's smart. There's one form to fill out. It's real simple. What were your revenues? Multiply that times the 23%, send that in every month, right? So very, very simple to implement, and there will be a full year transition given for all retailers to implement the software necessary at point of sale to get it done. Yeah, it'll be real easy to create this transition. So the IRS, I've mentioned some points here, and let's point them out again. $13 billion to operate annually, bloated. Collects only about 75% of what it should. the IRS would eliminate the IRS, or excuse me, the Fairtax would eliminate the IRS by repealing the 16th Amendment, and over 3 years would defund it, and it would be gone. So think about this. When you pay your taxes when you make purchases, not filling out detailed income tax forms. Like, this is a blessing, people. So it's really fair. And I've already mentioned part of it, right? You spend more, you pay more in taxes. And, you know, right now, yeah, if you make more, you're going to pay more in taxes, but we're inspiring the wrong behavior. So a wealthy individual can go out and spend a whole bunch of money and still pay a ton in taxes as a result, and the lid is off. They can go invest as much money as they want to growing their business, and they're really inspired to do that. Like, you know, look, what are business owners going to do with the windfall of money that comes back into this country once capital gains tax and personal and corporate income taxes go away? Guess what they're going to do with it? They're going to invest in the things they know best, their business. And, you know, that's just really logical. Makes a lot of sense. And they don't have to think twice about where they should cap it. They can make as much as they want, and nobody will ever know the difference. Meaning the government won't know because their privacy won't be impeded. That's nobody's business. Yeah. So it's fair in that way, and it's also fair that we've really looked after the downside. You know, we've kept a, let's call it a safety net to a degree in place where we don't overburden lower income class Americans. And so there's an element of the fair tax called the prebate that assures no one pays federal taxes up to the poverty level. And what this means is, well, here's the illustration that you can really see it. So I'd like you to move your eyeballs to the right side of the screen. And let's factor in a 2-adult household with 2 children. So move your eyeballs down to the green line that's been highlighted. The Department of Health and Human Services has created poverty level thresholds based on the size of your household. And they've got a formula for this. And what they suggest is that if you if you spend or consume $32,040 with a 4-person family, you're spending at the poverty level. And so what the prebate does is it reimburses every qualifying household, regardless of income. To be a qualifying household, you need a valid Social Security number. And it reimburses you at the beginning of each month for the fair tax your household will spend up to the poverty level limit, right? So if you take your $32,000, roughly 32 grand in spending for your family, you multiply it by 23%, that means over the course of a year, your annual prebate, your annual taxes paid will be $7,369 on your spending. Well, if you divide that by 12 months, you get $614, and at the beginning of every month, every qualifying household with 4 people in it, 2 adults, 2 children, will receive a direct deposit of $614 right into their bank account, reimbursing them in advance for the fair tax that they will have been levied or will have been levied on their spending over the course of the month. So what we've done here in effect is to say, listen, we want to untax the spending that occurs at the poverty level for everybody. So everybody, regardless of income, is qualifies as long as they've got a valid Social Security number. You know, it's just a really thought out, methodically created component to this legislation that makes a big difference. All right, I think I've covered that. So let's talk briefly about the impact on prices. This is really important. So it's really easy to think that, okay, the Fairtax rate is 23%. That means prices are going to go up by 23% across the board. So businesses can cover this new tax. Well, yeah, really easy to forget that we are untaxing personal corporate income taxes and all the compliance costs that revolve around those. So right now, what's happening is you've got business income taxes that are passed off to the consumer, and those are the costs to comply to our federal tax code, plus the actual corporate taxes that they pay, and that's considered what we call the embedded tax, which is approximately 22 to 23% across all industries at the retail level. You know, in other words, it's a little bit different for, let's call it, clothing industry than perhaps the automobile industry. But at the end of the day, the average is roughly 23%. That's how much it costs a business in complying to the tax code and paying their federal income taxes. So like, if a business has $100 for ease of numbers in cost, what we're saying is $23 of the 100 is complying to the federal tax code and paying their corporate income taxes. So what happens is the embedded tax gets eliminated because all those taxes go away and the fair tax gets inserted. Now it's not a wash, and part of that is because of transition costs, but roughly you could expect prices to go up between 10 and 15%. And you may think, oh wow, well that's something. Yeah, and by the way, the average American's income is going to go up by 29%. So look at, financially speaking, between eliminating our current tax system, moving to a consumption tax, getting the prebate, and choosing to purchase used goods, if you like, you know, you have come out in a financially much better position. Everybody does. So it's a really brilliant process, and we want to inform you on what the impact on prices will be. They're going to go up by 10 to 15%, and then market forces of competition are going to bring them back down to pre-fair tax levels, and everybody's going to be better off. Yeah. So we've got a piece of legislation that is really brilliant, right? It inspires the right behavior. It's very simple. It's transparent. There's no loopholes. There's no privacy impeded, and it's much easier to police. And, you know, like, we've got it all going, and then you scratch your head and you go, well, why wouldn't we just do this? Who doesn't want it? You're looking at it. These are the people with something to lose. 50% of lobbyists are tax lobbyists. They make a high 6-figure to 7-figure income because they save their wealthy corporations. They represent a lot of money when they lobby Congress to make some shifts in the income tax code, which, by the way, we never know about, which is the reason why politicians, on the second bullet point, they like operating in the dark like they can right now. You got a 75,000-page tax code? Well, you can rewrite a bunch of that, and your citizens will never know the difference, and that's how you pay for your projects, and you know, you make things work in your favor. You don't want to change it. There's a big shift in power that occurs when the people who are spending trillions of dollars in our budget have to be more transparent about what they do with it, and, you know, how they collect it and what the rate is. Yeah, so like, think about it. Here's an example. You go to the store, you buy a pair of designer jeans, and the fair tax is inclusive, which means the price tag on the jeans says $100. You go check out and you pay $100. and you get your receipt, $77 was the cost of the jeans, and $23 was the consumption, the national retail sales tax. Well, look, on your receipt, if it says 30% and you ended up getting charged 100 and whatever that is, $103 or whatever, you know, it's like, you know what's going on. They can't hide from us. That's a big shift in power, ladies and gentlemen. And that's unfortunately why politicians, many of them, like to keep things just the way it is, even though we're worse off for it. Yeah, kind of sad. All right, so we're going to pause here, and we have given you an overview of the Fairtax, and now what we're going to do is pause and begin to take your questions. And then we'll shift to our special topic, and we've got a few other great goodies in store for you tonight.
Oh, this is a first, Mark.
I'm just seeing it.
Very, very first, after 8 years. I think we have more experts on here than they admitted when they took your poll.
Yeah, what Larry is referring to here is we don't have any questions. So either this is the best job I've ever done in 8 years, possible, I'm feeling good tonight, or we've got some, you know, great experts on the line with us who really understand this.
There's a hand that just went up.
Yeah, let's check it out.
Couple of them now.
Yeah, Larry, answer Gene's question if you would. What happens to state taxes under the Fairtax?
That's an easy answer, Gene. Nothing. The Fairtax is designed to address only the federal income tax system by eliminating it and replacing it with the national sales tax. The state tax system will be affected only insofar as if the state has an income tax. They currently, residents of the state who file their state income tax return have to base it off of their federal tax return. Well, there will be no more federal tax returns for anybody when the Fairtax is implemented. So the state tax will have to make some adjustments to allow for that. And the feeling is that they will probably end up going towards something very, very similar, if not exactly like the Fairtax, because it's much simpler to enforce, much more or less expensive to enforce and to administer, and they'll just fall in line with the Fairtaxes. Everything new is taxed, and everything used is not taxed. Mark?
Yep, thank you, Larry. And thank you for the question, Gene. I'm going to go to Lane. Lane has a hand up, and I'm going to unmute Lane. I'm going to attempt to pronounce your last name, Lane. Dizon, perhaps. So, Lane, I've unmuted you,
yes, sir.
And if you have a question, you have the floor where everybody who's on the line can hear you, and we'd love to have your question live.
Yes, sir. There's a couple of questions I had about the different things that will happen to taxes. I understood that we were taxing, that the Fairtax would tax new retail goods, and I was wondering about things like the utilities that we pay, the cable, the phone, also stock and mutual fund share purchases. You know, when we usually don't pay taxes on those, but when we cash them out, we pay capital gains, which is going to go away. How does this affect Social Security, Medicare? And when someone would purchase a home, are we only taxing new home builds, or are we taxing? You understand? Like I bought a used home. I don't know if you can call it a used home. And I'll turn it back over to you, Larry. Thank you.
Yeah, Lane, really appreciate the questions. We'll answer them, and thank you for being clear and concise. We appreciate you. I'm going to go ahead and mute you, Lane, and we'll get you back on if we need to here. So let's tackle these one by one here. So I'm going to start, and then Larry, you can pick up my pieces here. When we think about where the tax gets levied, Lane, the thing to ask is what is being consumed, is it a new good or a service? And a service, if you think about it, is like every time a service gets fulfilled and rendered, it's new. So in a sense, a service is the same as a new good. It's just coming in perhaps a less tangible format. So, for example, with stock, and again, Larry, you correct me if I'm wrong, but how I see stock is that when you purchase that, if it's an IPO, it would be, and it's the first time offered at the retail level, it would be taxed. However, when you buy shares that have been bought and sold many times over, it would be considered used, and it wouldn't, the fair tax wouldn't be levied on that. Yeah, so Larry, could you weigh in on that? I would love to hear your opinion of it.
Yeah, well, I don't think even an IPO itself is going to be taxed because it is an investment and there's no taxing on investments. What will be taxed, and it's being taxed today, Lane, it just doesn't show up. But the taxes that are imposed by the income tax system, the taxes that broker pays are embedded in his service charges. Now, he collects them when you sell out, but as I recall, when I used to buy and sell stock, and I don't mean professionally, I just individually, I paid I think it was like 1/4% when I purchased and 1/4% when I cashed out. If it's still the same way, that's not going to change any. And I can't speak for how that works. But bottom line is the item itself, the investment itself is not taxed, but the service that you are getting from your broker will be taxed. And of course, that's a lot smaller amount than what the tax would be that's embedded in there. As far as the sale of the product, it's still not going to be taxed because, as you noted, there's no capital gains tax, but you will have a tax on the fee, on the transfer fee, the sales fee, whatever they decide to call it when you sell that stock. On your house, you want to pick up the house, Ron and Mark, and I'll chirp in afterwards if necessary?
Yeah, actually, before I do that, speak to utility payments.
Utilities, they also will be taxed, but once again, those utility costs, and I'm going to use the term costs and price. Costs being what the actual cost of the service is through the supply chain, or the actual cost of the product through the supply chain, and the price is what the end seller sells to us, the consumer. Okay, so cost and price. The costs will go down on everything in all of our industries today because they all have and housed within them their taxes and their compliance costs. They're going to go away. State costs won't, but federal costs will, we're talking about. They'll go away. And then at this new lower cost going through the supply chain, whether it be a utility or a product, when it gets to the end seller, that person, that company, will add the sales tax to that new lower cost, and that's where we come up with the 10 to 15% total increase in retail pricing. But as Mark also pointed out, the average person will bring home over 29% in real cash dollars under the fair tax. The next thing was the house then, Mark. You want to pick that up?
Yeah, absolutely. So, yeah, and thank you for bringing it up, Lane, because I usually use this as an example and I simply missed it, or I skipped it today. So a good example of how where the fair tax gets levied is in the construction of a new home. So the home builder who builds the new home does not have the fair tax, does not pay the fair tax when they purchase all of their inputs, right? Those are business-to-business transactions. When they buy land, when they buy brick, when they buy wood, when they buy plumbing, et cetera, everything that goes into a home, no fair tax levied. Business-to-business transaction. So then they construct the house, and they're selling it for the first time at the retail level to the end consumer. Then the fair tax is embedded in that. So the person who buys this brand new build, they're paying the fair tax that's in it. And then let's say that person lives in it for several years, and then they go to sell it. Well, the next person who buys it, and then anyone who buys it, every time it turns over after that, nobody will ever pay the fair tax again on it. So, yeah, I think that answers your question, Lane. And if not, please put your hand back up or write anything in, and we'll be happy to address anything that you still have a question on. And your hand just went up, so I'll go ahead and unmute you. Go ahead, Lane.
Yes, sir, Mr. Mark. I'm sorry. There were two additional things that came up while you were talking. One, right now, a large part of the taxes that come out of my check every week are for Social Security and Medicare, Medicaid. And then the second thing that I'm all excited about is how we're going to
Lane, I think we lost you. Oh. We'll try again, Lane. Are you there?
Yes, sir. Yes, sir. Did you get the thing about the Social Security, Medicare?
I got that part. What was the second piece?
Imports and exports, because now
keeps fading out.
Yeah, Lane, we get the gist. So the first part is with respect to your payroll taxes, yeah, there's not going to be any withholdings in your paycheck anymore. And when we talk about the average American's income increasing 29%, you know, that's where that comes from. Like there's not going to be any more gross pay, net pay. If you're supposed to make $5,000 a month, and then with the fair tax, you take home $5,000 a month. So payroll taxes get rolled back, and the fair tax generates enough income, Lane, to keep Social Security and Medicare going. In fact, because of the robust economy that it's going to create, it's really going to save these programs. Larry, is there anything, we didn't get a question yet from Lane. For some reason, he kept cutting in and out. But do you want to speak to imports and exports?
Yeah, I do. I also want to add that on the Social Security coverage and Medicare, that because of the underground economy, which is a couple $1 trillion now being taxed where it was not, and it is not under the income tax, that is an additional input to the Social Security Medicare systems. And the only reporting that needs to be done each year to the Social Security Administration is your gross income, so that when you are at the age to qualify for Social Security benefits, they can calculate your benefit. So once a year, your gross income will be reported to the Social Security Administration. Regarding inputs and exports, because as Mark noted, there are no business-to-business taxes, okay? No business-to-business taxes. There are no taxes on what we're exporting. So the cost of our goods and services going offshore are going to be much, much more competitive than they have ever been because of that lack of taxation on them. Imports will be taxed at the 23% rate, just like domestically produced products, which will help even further level the playing field for us, domestic products and services versus international products and services. Mark?
Great. Thank you, Larry. Thank you, Lane, for your questions. Anything else, please write them in. I know there's a couple more hands up, and I'm going to request that those with your hands up, if you haven't already done so, write in your question. I'm looking at the clock, and we want to be respectful of people's time tonight, and we've got a number of things to cover here. So I want to continue with the questions that are written in, and then shift to special topic, and then get back to them, and then cover a couple other items here. So Larry, Andrew asked the question if there was a report, and I assume he means a public report created from the $30 million in research that went into the Fairtax legislation. I'm not aware of a special report. However, I am aware that the legislation itself can be read and is available. And there's a number of studies at the Fairtax.org website that speak to various research and points that were considered when creating the legislation. Is there anything else you'd say about that, Larry?
Yeah, there are actually some papers, white papers, within our research collection there that were created by the authors that did the research themselves. Some of them are way beyond my ability to understand them, Mark. I've looked at them, and when I saw formulas that were as long as my arm with a lot of brackets of one type or another, I said, this is not my ball game. So, but there, yeah, and then there are the reports that I would say are summaries, if you will, of the various researches. But if you'll go to fairtax.org and then go into the research tab, you can get access to any of that information that interests you. It's broken down by in several compartments depending on various logistics. For example, real estate, tax reform, agriculture, manufacturing, things of that nature. So there's a lot of good information on there. That was the result of that investment in research. And just for accuracy's sake, Andrew, it was $20 million, not 30. I wish we had another 10 million right now because we've got some research, additional research we'd like to get done very quickly. That's all I got for you, Mark.
Great. Thank you, Larry. Thanks for being my fact checker. All right. I think we've covered this, and this was a question from earlier, but Mark asked the question, how are Social Security benefit amounts paid after Social Security taxes are eliminated? And so as I shared in answering an earlier question, you've got a piece of legislation here that will raise enough revenue to keep these systems going. And when the Fairtax legislation was created, Social Security and Medicare were factored in. You know, obviously big spends for the government, and the 23% rate was created with those two programs to be maintained and kept in mind. So yeah, if you have any other further questions about that, Mark, please write it in. Mike asked the question, what about charities? How does the fair tax impact charities? The current tax code encourages that through a tax credit. Yeah, so this is really great. And it actually speaks to a white paper that is on the fairtax.org website, one that I've read, and it's really brilliant. And the gist of it is this, Mike. Through an extraordinary and expansive amount of study and research of people who give, the overwhelming conclusion is that people give because they deeply believe in the worthy cause that they're supporting. They do not give to get a tax break. The tax break is the booby prize. Like, it's kind of a nice little cherry on top. It's great. But that's not why people give. They give because they believe in something and they want to make real change happen. And they feel passionate about something. So they put their money where their mouth is. And with all Americans having more disposable income than ever before, you are going to see charities, like a boon to charities like we've never seen before. Like, our giving spirit will really come out as the fair tax puts more money in people's pockets. So that's what you've got to happen and what you've got to look forward to as it respects to philanthropy. We covered this, I believe, Timothy, used goods, untaxed, cars and big ticket items like houses. I covered a house example. Same thing with cars, used goods, untaxed. And then Mark asked the question, isn't the 23% tax really 30%? So here's the deal, guys. It's like this. The fair tax is inclusive. That means when you go to the store, the national retail sales tax is included in the price tag that you're looking at. In the example that I used with the designer jeans, if it was $100 and it was exclusive, you'd be paying 123 bucks. So this is a matter of, semantics. So here's the deal. Here's the math on it. 23%, okay, designer jeans, $100. Check out, get your receipt. $77 were for the jeans, go to the store, 23 go to the government for the sales tax collected, right? The total amount paid is 100. So if you divide $23 in taxes that you paid by 100, the total amount, you get 23%. If you divide 23 by strictly the cost of the jeans, $77, you get 30%. So look, it's, kind of the chicken and the egg, and some people like to really kind of monkey around with it, and yeah, so that's the math on it. So I hope that clears it up, Mark, and if not, you can write in and can keep explaining it if we need to. All right, we've got a number of questions here, and I want to make sure we cover some really important items. So know that your questions are important and they will get answered. And we want to cover a couple of things now that are really important. So stay with us. Don't go anywhere. So we want to talk about a couple of things here. The first is our special topic, which is consumption versus income. And then we want to invite you to take a look at joining the 1040 Club, and we'll get to that in a moment. So consumption versus income is really simple. Now, there's a whole lot of data and numbers that I could have thrown up in here, and when I put this presentation together, I thought, in the spirit of simplicity, let's just keep it to a couple of graphs and charts. So what we want you to know is that historically, when you look at the ebb and flow of income versus the ebb and flow of consumption, and you look at them side by side over the last 100 years, hands down, the data doesn't lie, consumption is more reliable. In other words, in tough times, people's income, and people lose jobs and their income goes away, or their income goes way down, but they still have to consume. So consumption is much more reliable than income, and on that premise alone, you have got a tax system and platform that is more advantageous for your government. And here's a couple of charts to show you this. So, here's income. Here's median income over the last, 50 years or so. And look at the dips. Like, there's real peaks and valleys here, right? So, yeah, I get this is very generalized, but again, we, in the interest of time and attention, we don't have the space and the capacity to go into details. But you could see the dips. And now you look at consumption and personal spending. And this thing just goes up, man. It plateaus in some spots. And, personal spending really dipped, of course, during the Great Depression. But boy, this thing just goes up and up. And so I appreciate the roughness of this, and take our word for it. We've done the research. The data doesn't lie. Consumption's more reliable than income, and as a result, you've got a tax platform that is really more advantageous for the government. which means why aren't they looking at it? And we've already covered that because you've got some, people who are really looking out for themselves and self-interest. And admittedly, there is large perceived risk in making a real fundamental shift in the revenue model for the country. And yeah, that's true. There is a real shift, but it's one that's been backed up by research and is incredibly well thought out. And we know that what we've got is broken. So the real risk is not making a huge tax reform in the broken system that we have. Okay, great. So we want to speak to you for a moment about the 1040 Club. And the 1040 Club is very simply a fundraising mechanism for AFFT, Americans for Fair Taxation, that helps contribute to all the other private donations that occur in this grassroots nonprofit organization so that we can be really effective. And it's called 1040 in light of the 1040 form, tax form. And what the 1040 Club is it's a commitment to contributing $10.40 every month. That's it. So I would, out of curiosity, like real curiosity here, I'm going to launch another poll here. And I am simply going to ask, are you a 1040 Club member? So please go ahead and let us know. Are you currently a member? Are you contributing $10.40 a month? And we've got about 50% of the people voted. Please, everybody, we really appreciate you contributing here. And we've got about 80%. We'll close it out in 5, 4, 3, 2, and 1. Great. So we're closing the poll, and I'll share the results, and basically no. Great. Thank you for doing that. So look, I would like to invite you to become a 1040 Club member. So here's what I'm asking you. If you're new to the call, well, yeah, let me take that back. For anybody that's on this call, whether you're new or you're an expert or you're somewhere in between, you've got some knowledge, I would like you in this moment to ask yourself, does this legislation, does this idea align for me? Does it benefit me? Does it benefit the country? Is it a good idea? Does it put us in a better position than where we're at right now with our current tax code? Yeah, I want you to take a minute right now. We've got 6 months here, everybody, to influence major tax reform. So why not now? So, think about that question, and as you're thinking about it, I'm going to, really put you on the spot for a moment in a very anonymous way. And I'm going to launch another poll here that asks you, are you willing to commit? For 6 months, would you be willing to commit $10.40? That's it. That's what we're asking for tonight, $10.40. That's it. And if this aligns for you, then we're going to really invite you to go to fairtax.org and make a donation. And at the end of 6 months, we'll know where we're at. And we'll either have gotten this legislation passed or we won't, and you can press stop. So, and it's really interesting to watch, actually, the voting. And I imagine what's happening for people is that they've got their wheels spinning right now. They're wondering, yeah, how is this thing occur for me? So I'm going to close out the poll here. I'd love it if those who have voted would be willing to, or haven't voted, be willing to make a vote. And I'm going to share some really interesting results. Are you ready, Larry?
Absolutely. You know,
So,
if they will think not only how it will enhance their life, if you will, never having to file a federal income tax return again, not having the costs and the inconvenience of keeping records so that you can either do the taxes yourself and fight the April 15th rush or pay somebody else to do it for you and fight the April 15th rush. Bringing home 29% more in your dollars every week. Actually, it could be a lot more than that because if they have contributions taken out, or if they have withholding from their paycheck, for example, for a pension plan, that's going to lower their net take-home pay now, which means when you add that, or when you deduct that from your net pay, and you divide that into the amount of money you're taking home, it's going to go well beyond 29%. That's a heck of an increase in take-home dollars, in spending power that you have in your hand. And then think about taking some of this power, some of this control away from government. Do you like doing things just because they've made it maybe convenient for you to do or inconvenient for you not to do? I mean, we can get the government, we can get Congress out of our lives. And it is the only tax reform plan that literally taxes the underground economy. No form of income tax can. A VAT cannot do that either. It cannot beat the underground economy. So the benefits here are many. Some of them are subtle. And, you know, like Mark says, 6 months is all we've got. And the results look like they could be better, Mark, but it's better than what we had.
yeah, well, it's interesting. You know, we kind of know where we stand.
They've got more
So look,
questions on the board.
yeah,
Maybe after we answer those, that 64% will go down to 30%.
well, well, we could relaunch the poll. So we're going to answer your questions. Before we do, for those of you who said yes and or those who are maybe and would consider it, look, fairtax.org. By the way, on the main page, if you scroll down, you can sign up for Fairtax Friday newsletter. It's a really brilliant resource, keeping you up to speed. You know, just go over here to donate, click on 1040 Club. You put in your information, they'll hit you for $10.40 a month, and at any point in time, you can stop it. So with that said, we thank you for participating. And we are going to continue answering questions because that's what we said we would do, and we're really committed to that. And let's keep rocking and rolling. You ready, Larry?
Sure enough, Tracy's we already answered. Medicare taxes will be eliminated, but Medicare will be covered by the sales tax. Thank you, Tracy.
Want to speak to Mark's question? There's a question from Mark that says, why is the fair tax mechanism better than a VAT, a value-added tax? Larry?
Because a VAT is also a complex and can be very convoluted form of taxation. A VAT taxes the income or on each step through the chain, through the supply chain, and then at that same point, the point in the supply chain that is paying its supplier the tax, it gets to, if it records it, it gets to deduct that payment when it adds its own costs and VAT tax to the item, whatever it is, product or service, and that gets replicated through the entire supply chain. Now, if the supply chain is from one person to the consumer, of course it's very short, but you've still got 20 or 25%, 30% VAT there. And government can still play favorites as far as businesses and industries go by adjusting the VAT rate at different points in the supply chain. A national sales tax eliminates all of that and all of the paperwork and the headache of complying with the VAT. So once again, there's really no fair comparison of a national sales tax as presented by the Fairtax and any form of taxation on any kind of income. Mark?
Yeah, great. And Larry, here's another one for you. So this is from Mark. He says, people will underreport their gross income, so Social Security payment calculations will not be reliable. Under the Fairtax, why wouldn't someone overreport their gross income just like they underreport their income now? So basically what Mark is saying is, do we have a loophole here that will be hard to police?
If it's a self-employed person, they certainly have the opportunity to overreport their income, but because they're going to be reporting to their states, the states are going to be much closer to what's going on with the businesses in their state. And if the income being reported once the Fairtax is implemented shows a different trend than what it was when it was just a sales tax, a state sales tax, that will be looked at. So there will be some potential loopholes there, but it will not amount to a lot in actual revenue to the government because it'll be, the tax system will be so simple, it'll just be too easy to comply with it completely and report the income right. Now, if you're an employee, your employer is going to report that based on what they would have given you in a W-2. They'll supply a similar form to the Social Security Administration with the gross wages paid to you. Mark?
Great, Larry, thank you. Corey asked the question, what is the anticipated impact on the new car industry if used car prices stand to decrease? So, Corey, I don't actually see it this way. I don't see used car prices decreasing. All prices across the board, on used or new goods for that matter, are going to increase marginally. You know, and then they're going to come back down once competition weeds out or has an impact. When people try to gain market share, they'll do that by lowering prices. But the bottom line answer to your question is, what I believe you're asking is, hey, if I could save money and not pay the fair tax on a used car, isn't the used or the new car industry going to really be hurting? And the answer is not a chance. Why is that? Because consumers purchase for value when they perceive value. Like, look, if I'm in the market for a new car and I see tremendous value over the used car, like, yeah, it's going to cost more. It costs more now. I'm going to keep money in the new car. You know, especially Americans, we're really great at spending money. You know, we like to spend a lot of money. And we're going to have more disposable income than ever before, and you can bet that the retail product industry is going to experience a boon because people are going to have access to more cash. So, yeah, that is not a concern. Anything else you'd say about it, Larry?
Well, the one trend that is evident is that if the used market becomes so attractive because of the lack of taxation on used cars, those used cars are going to get purchased up. And as demand for them increases, the price is going to start going up, which is what happens today anyway. So the consumer will be the end arbitrator as to where the prices are going to be. And as far as the new car dealers go, they will find way to add something to their product that makes it more attractive than a used equivalent vehicle. Mark?
Yeah, thanks, Larry. Timothy wrote in and he asked, can I just lump sum the 6-month commitment to the 1040 Club after the holidays? That's a great question. Yeah, absolutely. You can go to the website and there's an option to do just a single contribution. So, yeah, how much would that be?
$60.60. $60.60.
Yeah, great. Thank you. And if you're in alignment with the fair tax, I wouldn't wait. I would go there right after this presentation ends, or you could leave now and you wouldn't hurt my feelings as long as you're signing up for the 1040 Club. Thank you, Timothy. Lottery winnings. Would that be taxed? Asked Corey. Radio, TV show giveaways, etc. Yeah, so remember, your brain is understandably where our current tax code is, Corey. Right? That's income. Income taxes go away. So, yeah, unless I have misread it, Larry, no, lottery winnings and giveaways like that, untaxed.
Correct.
Yeah. So Corey asks, how and why would the fair tax be revenue neutral if the tax base is increased? Well, that has to do with the rate of 23%, Corey. You know, so in addition to creating the tax rate that would keep us revenue neutral, a factor was what is the tax rate threshold that Americans could stomach. You know, if it's 50%, you know, we're in trouble. You know what I mean? Like people, that would be such an increase that people wouldn't be able to stand for it. But at the 23% rate, and with the elimination of the embedded taxes, which are relatively 23%, and a marginal price increase of retail goods across the board of around 10%, you know, we can handle that, and we've got more disposable income. That works. But if we make it a lot higher, then it won't work. And so even though the tax base is increased, the rates and the math and the formulas involved keep it revenue neutral. So it's the best way I can explain it, unless you'd add anything to it, Larry.
Just once again, the underground economy contributing now where they are not under the income tax, and visitors, 60 some odd million visitors from other countries coming in and spending their money here, they will not qualify for the prebate, as will illegal aliens who are here. So they will be paying that 23 cents out of the dollar on everything they purchase that is new. And somebody here I saw, Mark, said you're not understanding the math and being hit on it. Look at it as no matter how you want to calculate it, it's 23 cents out of the dollar. That's the tax being collected by the government. Okay, Mark.
Yeah. So we have another question. I wrote my congressman about HR 25. She told me it was in committee, so there's nothing she could do right now. How can I push to get this to the forefront of the issues that Congress is facing? Well, that is the question indeed, Lane. Thank you for writing it in, and I will take a stab, and Larry can follow me up. You know, look, the reality is that a congressperson looks at the stack of inquiries on a certain topic or issue or legislation, and the highest stack wins. And so there's a real grassroots effort here that's at play. So you're asking, how can you push this? Well, you got to open your mouth. And don't stop writing your congresswoman. You know, like, so do that every week, not just, you know, once or twice in your life. So upgrade your frequency to really consistent, you know, and then really open your mouth. And contribute to the 1040 Club so that we can have more money to advertise to the masses that will turn their heads. So those are the three things that come to mind. Larry?
Yeah, one of the things the 1040 Club will be funding is we have a federal government representative out of Texas and the president of Americans for Fair Taxation, Steve Hayes. They take monthly trips to Washington, D.C., and they visit with the various congressional representatives and their staffs as they can get appointments. And the appointments are usually set up, or at least the door is opened by a constituent within that representative's district. So I don't know where you're from, Lane, but I would do two things in your case. One is you're going to have a little more dialogue with your congresswoman. I think you need to sit down and think out some questions that you would like to present to her and find out what her thinking is about the fair tax as an idea. And then if she doesn't think it's a good idea, it doesn't matter what the reason is. Ask her, what is it she doesn't like about it? Find out what her points are and counter them. And if you can't do that today, maybe a few more webinars will help you out. You can call me or email me, and I'll be happy to answer some questions for you and help you along those lines. But there's plenty of help that can get you in a position where you feel more confident discussing the pros and cons of the fair tax versus an income tax. And you should be able to convince her that if she does not think it's a worthy idea and is not going to support it, that not to rely on you for any support for her reelection, but in fact, you'll be shopping for somebody to replace her. Because that is the one thing they do not want to lose, is that ultimate bit of power, that prestige of being a congressperson or a senator. And you have to go about it that way. I believe 90% of the co-sponsors we have did so because their constituents raised enough cane with them that they knew their position would be in jeopardy. Mark?
Really great, Larry. Thank you. Yeah, I want to make sure everybody gets this this website here. So one thing as it relates to this question is we can really speak up about it, and President-elect Trump, as Andrew has written in, has offered a website for direct citizen feedback on how to make America great again. And right now I am sending to all of you that web link. So go there and yeah, go there and let them know that the fair tax is America's next big solution. And it really is. It solves a lot of problems. Medicare and Social Security, and it just gets the economy moving. It's just a really brilliant thing. And I really appreciate all the support here. So let's see, a couple final questions here. Lane says, explain how much benefit we'll see when we retire and withdraw from IRAs and 401ks. Larry, you want to tackle that?
Sure enough, since I'm living that, well, I'm not living it yet because the fair tax isn't implemented. But under the fair tax, once again, the distributions that you might be taking or considering taking under your retirement IRA or 401k, under the income tax, you're going to be taxed as you take distributions. Under the fair tax, you will not. So there will be a windfall of financial benefit to those of us who are here when the fair tax is implemented and we take distributions on our retirement pensions that we would normally pay tax on because it was created under an income tax system. Mark?
Yeah, that's great. What would be, from Gene, what would be the process for changing the fair tax rate of 23%? How easy or hard would that be?
No harder than it is for Congress to change a tax rate right now. The Constitution gives them the power to levy taxes, and they will raise it as high as they can get away with. So we're working real hard right now to establish a new platform of taxation for this country that will be fair. Everyone will be treated exactly the same under the law. And if we let Congress go wild and change it and screw us, well, they're not going to be screwing some of us because we're too old to see it, but screwing the future generations, our children, our grandchildren and whatnot, then that's your fault for not staying on top of what your representatives have been doing. Beyond that, I don't have any solutions for you. They can raise it or lower it as they see fit. Mark?
Yeah. Corey asked us to walk through the pre-bid again. He says, I get the why, but I don't get the how with regards to spending that is calculated on the table you showed. Yeah, so the spending is related to, it's an amount of money a family or a household would spend that would consider them in poverty or not in poverty. So there's a threshold, right? If you're a family of 4, it's likely you spend more than $32,000 a year. And what the chart is saying, from 0 to $32,000 means you're spending very basic amounts just to cover your basic necessities of life, like food or your housing or medical supplies or transportation. And then once you cross over that threshold, you're spending on more disposable items. You're using your disposable income with more discretionary items. Cars and clothing likely, and et cetera, et cetera. So it was a very effective way for the authors of the legislation to find an effective way to support lower income Americans in a way that their tax rate wasn't burdensome. It's the best way I could explain it. I hope that clears it up for you, Corey. If not, send us an email, because we are at our last question, which is, are there any particular individual politicians or public figures who have been vocal opponents of the fair tax? Larry, do you have a Rolodex of anybody in your brain that you could speak to that?
No, I don't. And in fact, it's interesting because at one point in time, there was a lot of vocal opposition to the fair tax. But what we found as we reviewed that opposition, and it wasn't necessarily coming from politicians, but it was coming from pundits and people who proclaimed themselves to be experts in finance or experts in accounting and things of that nature. But as we looked into them, we found that they were either misunderstanding some of how the fair tax works, or they were purposely biasing what they were saying to make the fair tax look less good than it really is. The only reason we can think of that is that they are gaming the system to improve their personal financial position considerably. And they don't want to lose that consideration. They don't want to be taxed fairly. They want you to be taxed fairly so that they can be taxed unfairly. And of course, they don't think that if it's unfair for them, it's unfair for you too. But there is no list anymore. It's been quiet as far as people raising their voices in opposition to the fair tax. Mark?
All right, everybody, you have hung with us 20 minutes past the hour. Thank you so much for being with us. And look, this is not a hard sell here. We're not here to hard sell you and make you uncomfortable. And this is very real. You've got legislation in Congress. We've got more co-sponsors than ever before. We've got a co-sponsor who is the chairperson of the House Ways and Means Committee. You've got major tax reform that's coming. It's not a big ask. If this aligns for you, get over to fairtax.org, click on Donate, join the 1040 Club, commit to 6 months, and really make a difference here. It will really make a difference. And we equally honor you for being here and investing your time to learn, to be a part of the conversation, to challenge, and to be involved. And that's what America's missing is engagement. And so Larry and I and our colleagues, we appreciate you, we respect you, we honor you, and we invite you to continue supporting us through the 1040 Club. And with that, Larry, we will be off in December for the Christmas holiday. We will see you in January, ladies and gentlemen, 4th Thursday of January. Come back, invite your friends. We wish you all a beautiful holiday, and we hope you find it in your spirit to give to a very worthy cause. Have a great night, everybody.
Merry Christmas, everyone.